Yo guys, welcome back to another video. And in this video, I'm going to be talking about why sometimes it's best to let the news event play out, a very high impact news event, especially in the market. Let it play out and either trade it the following day or trade it once the market has sort of consolidated and it's ready to be traded. The reason I say this is a lot of people fall into sort of gambling mentality when they want to make quick money in a short period of time. And sometimes this can lead to people blowing their accounts, holding big drawdown, and basically throwing their emotional state out the window. And then you either fall into revenge trading, FOMO, and all the other bad stuff that come with trading. The reason why I'm going to be focusing on the FOMC statement and the FOMC press conference is because this is a very high impact news event regarding the interest rate. And the reason why investors like this is because it's regarding the monetary policy and sort of the future economic conditions of the market regarding inflation. So if we look at the recent sort of FOMC press conference we had, which was on the June 15th, which is the previous week, price pushed up from this area and skyrocketed around about 250 pips. Well done, obviously, if you did make money on this move. But again, I'd tend to wait for the next following day because you can see exactly what happened. Price basically consolidated, fell back into the area where the Fed release was initially, Fed statement was initially released. The press conference initially happened where the volume was mainly pumped into the market. Price came back down into this area. This is my buy zone. I did call this on the VIP, and a few members did manage to catch quite a lot of pips on this. Price came back into this, and then look, watch what happened. Price then moved from this area and moved another 370 pips, right? You get 170 pips extra from this sort of actual release. And also it's much more safer, it's much more reliable, because you also would have a much tighter stop loss to look at. You've got structure which has been made, which you can follow, because you can see that, you know, we have a sort of area where you could place your stops, right? Whereas if you're trading right on the market release, you don't know exactly what's happening because it's a speech, right? Especially the press conference. So sometimes you'll get some certain spikes. Gold will just basically spike all over the place. You can see here, price basically spiked below initially, spiked above, pushed all the way back down. I'm not sure how many pips that is. Let's have a quick check. Pushed back down another 60, 70, 80 pips, and then decided to have its big move up. So sometimes when you're trading, especially a highly volatile market where there's a lot of orders being placed, sometimes a broker tends to crash. And that's exactly what happened to me on US 30, is when I was closing positions on US 30 at the release of the FOMC statement, the broker slowed down. I tried to close positions. It was saying orders trying to close or like connecting or sort of thing. And then basically I had to wait like 10 minutes for the order to close, and it closed at a completely different price, and I made a loss on that trade, right? So these are like the disadvantages of when trading within a high impact news event at that time. And this is why certain funded companies such as FTMO don't allow you to even trade a news event because they know certain risks that come along with that. However, if you had waited for the following day, you could have got a much better entry within this area, less risk of the broker sort of crashing, of the terminal sort of crashing, and you have much higher targets, and you can see that the structure is intact as well. So from this move, we did get a 300 pip move to the upside. And what I'm going to do is I'm not just going to focus on this recent move that happened because it is hindsight. I'm going to quickly look back at the previous moves, the previous FOMC releases, and to see if this pattern sort of follows, right? So let's have a look at May the 4th, which was the previous FOMC press conference, and see what happened there. So Alt G, then we got May the 4th, so Alt 4. And let's have a look here. So we're on the 15-minute time frame. You can see we still have access to this on TradingView. And here was the release right there, 7 o'clock. So you can see price was pushing up towards this area here. Price had a big spike. So this definitely looked like the news candle here, where price came back down towards this low and then pushed up, right? So price pushed up towards the upside, towards 1900. Let's see how many pips this was from the release. So the release was from here. We spiked below. So yeah, I'll just do it from this area here. Price pushed up around about 400 pips towards the upside. Let's have a look where it was targeting. You can see that there's certain supply zones right here. It's probably the hour supply zone. The price basically tapped into this. So if you were waiting for a bearish move, which I probably would have been based on this structure here, sometimes a release actually pushes the market up with the orders. It would push market up to a certain supply area and then have the main reaction after. Okay, so maybe you could have caught this bullish move to this area where you were targeting, where you would have had your sell limits, right? Placing in this area. This would have been along my strategy as well. A few of you VIP members know that this would have been a part of the strategy right in the sell zone. And then price had a major reaction in the New York session as well, guys. Look, highly probable right in the New York session. It matches my strategy as well. And I'm sure it matches a lot of your strategies to be entering in the US session because it's very highly probable as well. And you have a nice place to place your stop losses, either above 1912, 1915, or even 1920 if you wanted to be very, very safe. And then price had a push back down to this area. Let's have a quick look at where it went after, because I haven't seen this. So then price consolidated more, and then we went back even lower, guys. See this? We went back even lower than the FOMC release. And let's calculate. Let's calculate a nice move. So again, look. Place within this zone, your stop loss would have been, say, around about there, right? But initial move 290 pips straight away, zero drawdown. You know, you get that sniper sort of trade. And again, this stuff I'm providing you guys for free. So if you haven't already, leave a like on this video and subscribe, okay? Because that really helps me a lot. But anyway, let's carry on. Price then pushed back 370 pips, and that was sort of around Asian session. Price came back to this area. You could have traded this as a buy zone. Price pushed up 250 pips. Boom. Look at that, guys. We're playing ping pong with the market here. Price then pushes up towards 1890. But, you know, this sell position is a SL entry at this point. I'm sure you guys would have placed a break even at this point and taken partials at least for that day and then held this trade because we're expecting price to move lower. Why? Because in the higher time frame, guys, look what the market's doing. Market's in a bearish sort of trend here, right? FOMC pushes up, we carry on moving down. Now, after this low is targeted, I would expect price to target this low. Look at that. Price then targets this low, takes out this low, and then continues falling, guys. Look at this. So you could have potentially held this trade for more than 1,000 pips, easy, right? So this is what I was trying to say, guys, is sometimes it's best to not even trade the action move because you get so caught up in looking at bullish moves. Sometimes it happens to me a lot on VIP. It happens to me a lot in general in my own trading where I'd be focusing on bullish moves and I'll just be focusing on that bullish move. Whereas what I could be doing is zooming out and saying that this bullish move will be targeting a major bearish move, right? So I'd basically look for these bullish moves. And then when the sell move happens, I would have missed it because I was too busy updating this bullish move, guys. So again, trading the actual news event, if you had waited and stayed out, you would have had a much higher probable move to the downside. Let's see how many pips this actually kind of pushed. Oh, that was right at the start of the yeah. So that was the main bearish move, and there's a total of 1,200 pips, I believe. Yes. Yeah, it doesn't matter. Anyway, I'm confusing myself. So yeah, so that is the impulse move towards the downside from there. Right, guys, I'm going to go to the next day now, March the 16th. So I'll probably have to go on a high time frame because TradingView won't allow me to go there. Let me just remove these lines. March the 16th. I think this happens every 2 months. Yeah, March, April, May, June, actually. Oh, this happened. Okay, anyway, March the 16th. Let's go. Let's keep it moving. Let's keep the momentum going. March 03. 16, and let's go. Okay, what happened in this one? Let's quickly zoom in so we can't see anything from the right. March the 16th, here we go. So if we look on the left, what was happening? Let's have a look. Price had this big bearish move towards the downside. March the 16th came up, and then we had an even right on release, I believe so. Yeah, right on release, we had a big push towards the downside. Looks like we did tag some of this supply area here, and then price pushed up. Okay, So there was the initial reaction. Let's keep moving and see what happened after. Usually I would mark a certain supply zone from the release. This is what I usually do from the release and wait for the retracement, right? So I'm going to place some sort of line right here and see what happened with price. Price actually came up towards this sort of order block, as you can see from here. Oh, my voice is going crazy. 1 second, guys. I'm going to mute myself. Apologies for that, guys. You can see that price retraced back into this area from the initial FOMC release at the high impact news. There was 400 pip move. Price then retraced. And say if you waited for the retracement, stop loss below the sort of FOMC release candle, right? And then targeted to clear this high. If price was in a bullish sort of state, which you were expecting, a sort of reversal at that time, price then tapped in, pushed up. Let's see where it went. Let's see where it went on this time. So this time it went to 500 pips, guys. You see, so you're there catching the major move after the release. So this kind of proves my point where sometimes it's better to wait rather than trading the actual news event. And I'm hoping that you guys are starting to see this and maybe like sort of going to adapt your sort of trading style and not to get excited when there's high impact news, because you don't have to even trade it, guys. It's much more probable, and you'll be able to be much safer trading either the day after. You can see this was actually a few days after, guys. So a few days after price, yeah, probably like 5 days, price waited to retrace, came back into the area, and then you had a sort of 2-day impulse move towards the upside. Let's go back even more. I'm going to do one more for you guys, and then I'll let you guys back test the rest of them. January 26th, let's go. January 26th, OG 0126. Where is this? No, okay. I'm gonna have to go high time frame here because I'm going further back. 26th. Let's have a look. Okay, so in this sort of move, guys, this was an interesting one because price basically pushed all the way up towards this upside. So you could actually trade this sort of event. This was a bit of a different one because I remember watching this, is because at this area, price kept pushing up towards this upside. So I was watching these sort of levels on the left here. Is we had an impulse move towards the downside, and all of this sort of consolidation is sort of a corrective sort of structure to fill all of these orders from this impulse move, retest 1850 again, and then this was right at US session, guys. Okay, US session. I'm not looking at FOMC release at the moment. This is a few hours beforehand, right there. So we had a US session pop in to this area. You could have placed your sells. Then we had the release. And then on the release, price then pushed down. Wait, 25th of Jan? No, sorry. This is the day before. So overnight, price then pushed towards the downside, right? Showing that it had a big reaction off this area here. So now price is at this area, okay? So you'd either would be waiting, and I'm going to keep this real. I'm not going to just follow the market and say what we would be doing. We'd either be waiting for a retracement, so a continuation, or on the actual move, price did push down. Let's keep going, see if we could have got entry. Wow, guys, look, 26th of January at 6 p.m., which is where the release was, right over here, guys, right over here, okay? There, for 6 o'clock candle, 26th of Jan. Let me just double check for you guys, 26th of Jan. Yeah, there we go. Let's go back and see what happened. So price had this move towards the downside, right? A sort of 500 pip move, right? But we were waiting for a retracement where? In this whole area. Why? Because we got FVG and all that sort of stuff. What was happening to price on the left? Price then basically came up into this area, and then we had a 200 pip move. And look at this, guys. Price then faked out, and this is where we had that sort of Russian news. Again, guys, look, this sort of strategy does not work all the time, right? But it can give you a sort of safer approach to the market, because you would have seen that price came back into this area, tagged that move, and you would have caught a nice safe 200 pips. Why? Because the stop loss would have been 70-80 pips as well. And this is the sort of trading that I do. And again, it's not always going to be fairy tale and roses when it comes to trading. Sometimes you do get an opposite move here, but we did get a reaction, guys. So again, a nice 200 pip move. Anyone would die for 200 pip moves, right? I got people out here risking 100 pip SLs just for the 30 pips. Okay. And you guys know I hate that sort of stuff. And you can see right here, we had the news saying Putin has invaded Ukraine or is on the way sort of thing. And then price broke out of this range and this setup was invalid. And then price basically skyrocketed to 2062. So guys, I hope this was an informative sort of video. I know it's a little longer than usual, but again, if you enjoy my sort of teaching, check out the free channel. Link is in the description. And be sure to subscribe, guys, because I'm starting to upload more videos, give some free value to you guys. Again, this stuff I use on my VIP, right? And I'm just passing this stuff to you guys for free. Okay, so leave a like, leave a subscribe, leave a like and subscribe. And if you have more videos you want me to look at or want me to do, leave a comment down below. It's been Elite Empire FX. Peace out.